Hey, everybody, we are going to talk about a delicious stock today, just to kind of tease what we're going to be mentioning. Before we dive in, John Quast is joining me. This is a stock that is kind of a turnaround story. Before we dive in, check out fool.com/Frankel, the link you see on your screen. Get a message from our sponsor, The Motley Fool. They're our sponsor, the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So, John, the stock we're going to talk about is a big one in the Southeast where you and I both live. This is Cracker Barrel. A lot of people probably aren't aware that Cracker Barrel is a publicly traded company, especially if you're not a big and experienced stock market investor. It's not a big company in terms of market cap, right? It's under $900 million, I believe.
Correct. Yes.
Especially now.
Especially now.
So just to kind of run through some of the stats, it hasn't been a great stretch for Cracker Barrel investors. It's down 55% just this year, or I'm sorry, over the past year. It's been a pretty steady decline too. It's not like one bad earnings report sent it over the cliff. If you look at the chart, it's been a pretty steady decline. I'll put the chart on the screen when I'm getting this together. But the stock is at a roughly 13-year low. Its all-time high was about $175. It reached that twice in 2015 and 2021. I saw on the chart. It had two pretty good peaks. It's about $40 now, if I'm not mistaken. I don't have the chart right in front of me. It has not been a great stock to own. And one look at the margins tells me all I need to know, and then I'll kick it over to you. It has a 69% gross margin and a 2% net margin over the past 12 months. So what's going on with Cracker Barrel, John?
Right. Yeah, Matt, this is a restaurant company, very, very popular, especially with road trippers. I used to work here a long time ago as a teenager, and people going up and down I-95 on the East Coast, man, always stopping in at a Cracker Barrel. A beloved brand, I believe, an iconic restaurant brand, but this is a company that is really struggling. Their same-store sales have been declining, and what that does is that hits your restaurant level operating margins. And so their profit margins have come way down. Still a profitable company, but at the same time, those full year or trailing 12-month net income down 80% from recent peak just a couple of years ago. So that's a big drop. And understandably, of course, the stock price is going to follow those earnings. And so the stock price down as well.
Yeah, I mean, I used to be in the restaurant business. A lot of frequent viewers of my channel know that I took a kind of gap year after college that turned into a 5-year stint in restaurant management. I know the business very well. I know it's very hard to make money. And I also know that you have to do things very often to reinvigorate sales if you want to be successful. That means changing the menu. That means doing kind of frequent renovations. And I get that some part of the charm of Cracker Barrel is it kind of feels like you're walking back in time when you walk into one of their restaurants. And that's all well and good, but it's pretty much the same experience and same menu that you got a decade ago. I mean, yes, they have some specials. There's, when they give you your menu, there's the little center insert that falls out that has some specials on it and things like that. For the most part, their menu really hasn't changed, though. And the look of the store when you walk into the store, it's the same stuff. I'm pretty sure it's the same exact stuff they've been selling for 15 years. My kids always want some of the old timey candy when we walk into a Cracker Barrel, and like you said, we go on road trips. They need to figure out how to cater to people other than those on road trips. But they recently, and I looked at the most recent Fool.com coverage on Cracker Barrel, and it was all stuff you wrote. So I feel very confident asking you this question. They hired a new CEO not too long ago. So kind of, why did they fire their old CEO, or did they resign? And what is the new CEO's kind of plan to right the ship?
Yeah, I mean, bringing in this new CEO, I forget her exact name. Apologize for that. But basically, she's coming in here now. She's been in here for roughly a year, and she has a transformation plan, and it's going to take about 3 years. That's what they're going for. We talked about this as being a high risk opportunity here. This is not a cheap plan. Okay, so roughly around 700 million in capital expenditures over the next 3 years to execute this plan. It involves a menu overhaul. It involves a restaurant remodel, a whole rebranding, if you will. Some of it is really sensible. Some of the plan is really sensible. So one of the things that she talked about was that there are certain things that they are preparing by hand in the kitchen, chopping it up by hand upon order, that they've been doing this for however long, and it's very, very time consuming, it's labor intensive, and it doesn't need to be. There's no reason for certain items to be prepared by hand in the moment. They can be prepared beforehand in a facility and then shipped out to the different restaurants and save on that time with labor. So some of the things very sensible. There are certain menu items that take far too long to make, far too labor intensive, that aren't popular. Great, get them off the menu. That is sensible. There are some needs for some menu renovation, and I think it was within the last 2 years they launched fried chicken. I used to work there, and that shocked me. I said, wait, they don't have fried chicken? I thought for sure that Cracker Barrel had fried chicken. No, they did not. There are other Southern staples like that that they can add to the menu, I'm sure, that would be uh, big hits with their customer base, easy to prepare, so they're not margin draining items. And so some of the plan is sensible. Other parts of the plan, I'm not so sure are going to work. There is a certain charm with Cracker Barrel that I'm not sure how much you can change without losing the loyal base that you have. And I'm not sure how big of a base you gain by completely repositioning that brand. I've seen some of the recent remodel prototypes, if you will. Uh, Not so much. It's not getting a lot of love, I'll tell you that. It kind of looks like a hospital cafeteria. Very not what you'd expect with a Cracker Barrel. Maybe it's just me. Maybe other people love it. I don't think it's going to be a big hit. So this may be a year or two of kind of wandering around before they realize, hey, we're not quite on the right path here. But the potential is there because, like I said, this is kind of an iconic brand. I don't know how much people are going to just leave this brand entirely. At some point, they're going to get it right, and people are going to be excited to be back at Cracker Barrel.
Yeah, I mean, the biggest thing is the margins. So you got to figure out how to improve the margins, and if people see the margins start to grow, then that alone will be a good tailwind for the stock. And it sounds like the menu is really the updates are necessary to make that happen. It's not just fresh taste, which that will bring in people, but you want if you can a lot of restaurants have smaller menus. That's a big trend these days, small menus, because you can prep one ingredient that's used in four different entrees, and and they're not really doing a great job of that. By the way, the CEO's name is Julie Massino. She
Thank you.
was, she was, and no, I was looking because the interesting thing about her is that she was a former Taco Bell executive, and for whatever reason, Taco Bell has a very strong history of producing executives that are great at turning around restaurants.
I mean, you
Big
look, Brian Nichol came from Taco
Brian
Bell.
Nichol is a former Taco Bell executive, the one that Starbucks just stole from them, and did a fantastic job of turning around Chipotle.
Yeah.
So I'm not saying that's going to repeat itself,
But you look at the setup here with Cracker Barrel stock, trading at about 15 times earnings. That's the depressed earnings. So it's trading. I don't know. Is the average for the S&P 500 right now around 25 times earnings, somewhere in there? So we're trading at a significant discount to what's considered an average valuation right now on depressed earnings. This is a company that's capable of 200 million annual profit. They've done it. They've done it multiple years. If you can just tweak what you have to tweak to get those margins back up, they haven't really lost that much in sales. I mean, I said same store sales are down, but not by much. If you can just change those margins around, make those changes you got to make, if you can get back up to 200 million in annual profit, a sub 900 million company, This is really interesting.
Yeah, I agree. I'm not a buyer yet, but definitely an interesting situation. It's a show me story at this point.
Yeah, I think that parts of this transformation plan are not going to work. I think they're going to have to try it, fail, and then come up with a new plan before it actually gets going. That's my personal take. But I do think that they're going to get there eventually.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.